Housing Planning and Development Scrutiny Panel. Item 1 of this meeting is filming at meetings. Can I just draw everybody's attention to the notice on the report back about filming at meetings? Item 2 is apologies for absence. We've had quite a few apologies. Apologies from Councillor Moeed, apologies from Councillor Barnes. We've had apologies from Councillor Gordon, and I think that's it. Yeah, okay. Item 3 is urgent business. There's no urgent business. Item 4 is declarations of interest. Does anybody have any declarations of interest? No? Okay. So next item is any deputations or petitions. There are no deputations, questions or petitions this evening. And item 6 is the minutes of the last meeting. Is everybody happy to approve those? Councillor Bevan.
I've got a few comments to make on the minutes. The actions listed, my understanding is that the result of those actions should be sent out with the public papers and not sent out on the day of the meeting in an email to members. My understanding when I was the chair of Overview and Scrutiny last year, all committees, the actions arriving from the previous meeting should come out with the results with the agenda papers so that they are a public document. And if the service has not responded by the due date, then that action should be marked no response from the service. So I'm just stating that because it's not acceptable that this information arrives on the day of a meeting. So that's just an observation. And some notes on the minutes. So the one on L here about the property that's been empty for a number of years, 105 Waverley Road. It's been empty for 2.5 years. I raised it at the last meeting. I got an email a few days ago saying it's going to be moved into temporary accommodation. Didn't say it's been let, so I'm assuming it's still empty. So as an action, can I be notified when it is actually let? That's the first point. The second point is the checklist of what the tenants get. I raised at the last meeting about tenants should be made aware of where the stopcock is. I know it sounds incredibly petty, but if you have to turn the water off in your flat when it's all leaking downstairs, knowing where the stopcock is and it's actually turning is really useful. And that should be on the action list or the list that goes out to tenants with all the various things on it. It's not on the list because that list was sent out this afternoon and it's not there. And then the last point is, I also raised the fact that the Lindale sheltered housing, the ground floor was all being redecorated. And if you remember, the scheme manager's office was left out because it's classed as a different type of property. So that's going to be done separately at increased cost and increased inconvenience. That is not in the minutes. So I'd like that to be added to the minutes.
Thanks, Councillor Bevan. Have we noted those points?
Yes, I think it is in the minutes. Yeah. So on the last page of the minutes, under the strategic asset management and property improvement plan, paragraph G.
Do you want to put your mic on?
Oh, sorry. Sorry, page 9 on the minutes. The second of last paragraph G. Lindell's, right.
Okay, and I think we've noted the other points and the requested actions. Otherwise, are we happy to approve the minutes? Okay, approved. Okay, so the next item is a report on the bed and breakfast elimination plan. I'm going to try to have about half an hour for this item so that we can then have as much time as possible on the budget scrutiny. So Denise, if you could introduce this for us, thank you.
Hi, good evening. Denise Gandy, Assistant Director of Housing Demand, and thank you for inviting me to come along and talk briefly about the B&B elimination plan. Just by way of context, in terms of our homelessness position in the borough, we receive government funding each year to support our homelessness prevention activity, around about 8.6 million this year and a tiny bit more next year. And as a sort of requirement of that funding, because government are now concerned, as we are too, very much so, about the increasing number of families living in bed and breakfast, it's now a requirement of our funding that we provide a B&B elimination plan. So any borough that's got more than 6 families in B&B needs to do this. We've not been in this position before. It is a challenging position again across London, but we submitted our plan to them. It's contained as the appendix in the pack. The reason it's in the format it's in is that that's the requirement at DULUC. So that is to reassure them that we've covered each area, so preventing homelessness, managing demand, looking at how we provide supply, etc. So that's Appendix 1. Just a little bit of context to the current situation. As I said, very challenging market across London, and a number of things have come together at once, I think, to create this situation. One is a situation of increasing demand following or during the cost of living crisis. We are seeing increasing numbers of people being evicted from the private rented sector. We're seeing pressures around domestic abuse and immigration pressures due to hotels being emptied by the Home Office, etc. So a range of issues going on that's increasing the demand at the front door at the same time that the housing supply market is very, very difficult. So what we've seen post-COVID is a real shift in the private rented market. So a lot of landlords who worked in the kind of sector of temporary accommodation or private sector lets at housing benefit levels are moving away from the market. So landlords wanting to evict to sell is now one of our main issues, whereas previously they tended to evict to kind of increase the rent a little, and that gave us scope for a bit of negotiation. But we're seeing a real kind of shift in the market. I mean, this is important to us for 2 reasons. One is that we are heavily reliant on the private sector. We don't have a huge housing stock compared to a number of other boroughs. And so the private sector has always contributed about 300 or so lets a year to our temporary accommodation position. And this year that is really significantly reduced. So we've got a kind of combination of increased demand, challenges around supply, doing work internally. So we do have the Haringey Community Benefit Society. So the council acquires properties and brings them back into use so that people who would otherwise be in temporary accommodation can move into a good quality accommodation. So there is a lot of initiatives going on which are detailed in the pack, but we are in a very challenging time, which the plan looks to address. And maybe if I leave it there and take questions rather than.
Can I just start off with a question? So this is a requirement now of the funding that we receive. So what's the kind of accountability mechanism? Is DLUC sort of monitoring our progress? And I guess how long do we have to get these numbers down in order that the funding isn't taken away?
Yeah, so we have a specialist advisor who works with us on our plan and meets us monthly anyway, and we monitor sort of progress to them. Because of the situation in London in particular, we do as well a very detailed return to them so they can see the situation in every borough around B&B. They've not at this, so our funding for next year is set. So they're not going to take that away. We get no feeling they will take that away. But for the following year, so for 25 onwards, I think that's when that could be a risk if this isn't under control. So I don't get the feeling they'll take it away. They acknowledge it's a London-wide problem. They'd be doing it to everybody, pretty much. But certainly they're thinking a bit about how they allocate homeless prevention grant anyway. So I think once we get to 25, 26, it's a real risk if they thought we weren't doing all we could. So they don't want to give boroughs money that we just spend on B&B, basically.
Thank you. Yeah, it's obviously a very challenging situation across London. I'll go to the panel first. Do any members have questions to start off with? Councillor Hymas?
Yeah, my question was about the pressures you mentioned specifically around domestic violence. And I guess one question I have is, I suppose, a kind of concern about the pressure not to move a domestic violence survivor on, because obviously there's a need to try and reduce the B&B use. So I'm wondering, how are you managing not applying that pressure so that people do actually have a place to move, while also coming up with like productive ways in which we don't have to use this kind of accommodation. And related to that, I wonder if you could say something more broadly just about the general pressures, and if you've seen an increase in domestic violence cases and what your reasons for that might be.
So the main pressure that we're seeing currently, so when the Domestic Abuse Act came in, it broadened the council's responsibilities around homelessness and domestic abuse to say that so previously people who didn't have children wouldn't automatically be a priority for housing and temporary accommodation. So the Act meant that we treat all single people as an emergency case if they become homeless due to domestic abuse. So the increase we're seeing is largely sort of single people rather than families. That's kind of fairly steady. We saw an increase during COVID and a little bit afterwards, but that's probably at the levels it's been previously. But we have an increase around sort of single homelessness. So in terms of that, I suppose the other pressure as well worth mentioning is because of the situation in the market, what we're seeing is that refuges are kind of silting up, so people aren't able to move on from refuges. So where previously we would have looked to try and get people into a refuge as the first stage, if that was something that they wanted to happen, that's proving more difficult because there isn't the move on into the private sector for people, so they get full more easily. We're looking around our sort of supported housing work, so there is a kind of grant programme that's about secure, safe accommodation. So we have Burgoyne Road, which is a women's hostel currently. We want, if we can, to get funding so that we can do more around that. We have quite a strong programme around security measures. We have Halston, we have quite a big commissioned response to domestic abuse, but it is a kind of challenging time. We also, in the definition of secure accommodation, then we shouldn't place people where they're having to share facilities with people. So again, it kind of limits access to some of the accommodation we have. So we don't, for example, use lodges for people who are fleeing domestic abuse because of the sharing and also the risk if they're found there. So I hope that answers the question.
Councillor Bevan?
I think we might have an impossible task here, because when you look at the bottom of page 15, the units that we're using at the moment for accommodation that are going to become vacant for various reasons total 250. There's 193 on the Love Lane estate itself, 21 on Brunel Walk, and 36 on another at the lodge. Total 250. So have we given ourselves an impossible task? That's my first point. And the second point is, can you just clarify, because it mentions voids in here, are the voids figures that we're given, do they include the voids at the HCBS, or are they not included in that? And then my last point, on page 34 at 513, it says undertake risk assessed checks on our social housing stock, resubletting, etc. Estimate 1% minimum. I don't know if I've got this wrong, but if we're doing 1% in a year, does that not mean it's going to take us 100 years to go round our whole stock?
So the 1% was what we would expect to find either illegally sublet or not with the correct tenant there. So in the increased level of occupancy checks that tenancy are doing, we would expect to come across people, and the kind of average is round about 1%. It may be a little bit higher because there was a time when this wasn't done quite so thoroughly, though it's happening now. So that was more about you'd expect to get a turnover of about 1%. And we're doing that sort of similarly in our temporary accommodation stock. And we're in discussion with Minesh round doing a targeted piece of work with round audit and things around both temporary accommodation and then potentially our own stock. Yeah.
On the voids one, so it does include if you see at the top of page 17, there were 272 general needs and 77 HCBS voids and 74 sheltered voids. So those HCBS voids, those numbers should be coming down because they've been contracted. Some of those have been contracted out for repairs. So that should help that. But obviously, I think how we allocate what we do have is something which is being reviewed both in the temporary accommodation and in the permanent general needs space as well. So that's all also a piece of work that's going on parallel to everything else.
And the loss of all those, is that going to be really a difficult, make the whole problem much worse?
All of those that are being knocked down are being re-provisioned. So what you hope to get is a bit more of a flow in the system. So that's a bit like we talked about the domestic abuse and refuges. When we don't have a flow in the system, that's why you get people don't get to move on anywhere. So with those homes that are being demolished, there'll be new homes being built. Like we've got new homes coming on at Walter Toll, etc. So people are moving into those, people are moving out of temporary accommodation, those temporary accommodation places are still free. So if the system works, you don't have the blockages.
Right, so that brings another, so if those 250 homes that are being used for temporary accommodation are going to be demolished and be whatever, and they're going to be replaced by 250 of our new build, if we use that 250 new build as temporary accommodation, can we not put them into the community benefit society and get the financial benefit of them being there rather than in the normal housing revenue account?
Yeah, so we have a commitment, as you know, to the Community Benefit Society, and we've actually been quite successful in bidding for match funding and money, so we can increase the programme. It is definitely a good option for people and a good option for us. In terms of the kind of loss of the 250, you know, sometimes this will create pinch points where something's closed but something hasn't opened yet. So there are pressures along the way, definitely. But overall, we will gain stock in the longer term that benefit, and where we do have gaps. So, for example, as you know, in the MTFS, we've committed to a purpose-built lodge, for example. We're looking for a second site because quite a lot of the temporary accommodation we've had previously in the lodges has been kind of meanwhile use. So we always knew it was going to come to an end at some point, like Whitehall Lodge in particular, because we knew we would be redeveloping Love Lane. So that's kind of built into, but I can't pretend there won't be some pinch points along the way where things aren't yet built. But overall, we will gain stock. So we've been doing a fairly consistent round about 300 lets a year for the last couple of years. And with the new build and Walter Tull coming on stream, you know, some of the bigger schemes, we expect that to increase quite significantly.
Yeah, can you just clarify the HCBS thing? If we put that 250 new builds into the HCBS, because they're new, they're not existing social housing, Can we get the actual financial benefit for doing that? Can we do it? That's what I'm asking.
No. So well, David can come in if he likes, but the grant funding for those is for secure lets, not for community benefit societies. Although some of the, I believe the capital housing acquisition programme CHAP funding can be used for HCBS, I believe, but not that funding at Multitool.
Okay, thank you. I have a couple of questions. Firstly, I'm just not massively familiar with relief as opposed to prevention. So could you say a bit about what that means and examples? And then I just wanted to clarify on paragraph 628. It's just a little bit confusing because all of the shifting figures there. Are we saying that we managed to reduce the number of new people we were having to put into temporary accommodation, and it was only a little bit less than last year, even though we have far fewer properties now than last year? Is that what that's saying? If you could just clarify that, thank you.
When they brought in the Homelessness Reduction Act, they kind of gave us 3 duties. So the first duty is to prevent. So wherever possible, the expectation is that we will do all we can to try and stop the person leaving that home. So we have, for example, a homeless prevention fund, so we can use that quite flexibly. So sometimes if there's been, you know, a kind of short-term issue with rent arrears, that's not a kind of recurrent thing, we can clear rent arrears. We've done deep cleans where someone's got into some difficulty. So we use that to try and negotiate with landlords and resolve situations so someone doesn't lose their accommodation. If you can't prevent, you then move on to the relief stage, which means you have a duty to provide the person with some accommodation or give them advice on how to secure accommodation. And that's another 56 days. So when people first leave, you've got 56 days to prevent homelessness. You've then got 56 days where you need to relieve people's homelessness. So if they've got children, for example, you might provide temporary accommodation at that stage, but they're still legally in this relief period. Or in the relief period, you might find someone alternative private rented accommodation, for example. So they kind of move on to something else. And then if you've neither been able to prevent or relieve in a way that's long term, then the duties we always had since 1977 about are you in priority need and the main housing duty part kicks in. So they've just put it in 3 stages now. And in terms of 6.2.8, so what this was looking to say, so what it's saying is even though we've seen a lot more people than we used to see, it hasn't resulted in the same proportionate increase in people going into temporary accommodation because we've still been able to prevent homelessness. It maybe isn't worded as well as it could be looking at it again, but that's what it's looking to say.
I just wanted to move to page 18. Yeah, page 18, 6.4.5. So obviously it seems like overwhelmingly the delay in moving on from B&Bs is the lack of alternative accommodation. But this seems to suggest that there are sometimes other barriers, and it talks about identifying what the issues to moving on might be. So I wondered if there were any other barriers that are kind of coming up relatively often.
So quite often practical things, so just around sort of you know, the difficulty in moving. So we do use Homeless Prevention Fund likewise to support people with removal costs, etc. Sometimes, you know, particularly if people have been in temporary accommodation for a long time, then that next step can be quite a difficult one. So we need to do quite a bit of work with people around sort of managing that expectation. They're probably the main sorts of things that come up. So just making sure that people are move ready. Also, so if people fall into quite significant levels of arrears, then they can be suspended from bidding for move on. So just removing all those things that might mean they're not ready. So they have a rehousing officer who does that with them.
Councillor Hymas?
Yeah, on 6.46 on page 19, it talks about the reasons people have exited B&Bs, and you say that 21 cases the housing duty was ended for another reason. I think my experience is, of course, we have to execute our legal duty, but also that sometimes families can, for reasons perhaps beyond their control, fall short of the expectations required of them in terms of having their duty discharged, which obviously leaves them in a really difficult situation. So I guess I'm wondering, what safeguards do we have so that there's kind of some common sense, I guess, is exercised before we discharge duty from families who are obviously very vulnerable and need our support?
Yeah. So in terms of the 21, there will be a range of things going on there, and I can always share the breakdown. But as you say, there will be some people in that 21 where we decide we don't owe a duty. So at the point when we place into temporary accommodation, we do it if we have legally a reason to believe that they're likely to be in priority need, etc. So in the course of our investigation, sometimes we will decide that's not the case, and we will give a negative decision for that reason. A limited number of people may be made intentionally homeless, for example. So I can likewise share the figures on that. So some of this will be about that sort of decision making, and each bit of that process has a stage where people are given the opportunity to put representation. So if we are about to make a negative decision for whichever reason, someone will get what's called a minded to letter, where we say this is what the decision we think we're making, and you want to make representation. So there is opportunity for people to get support and kind of feedback to us on that. If that doesn't overturn anything and we go ahead with that decision, then in the case of anyone with children, we do a referral to children's services in all cases. In some cases will involve connected communities, but quite often we keep open the opportunity of finding a private sector let, and we'll still help with the deposit at that stage to try and minimise people who fall out of the system totally. But I could provide a bit more breakdown on those figures if that's helpful, just so we know exactly what you can see. Exactly.
I guess the overall theme of both my questions is that the Department of Levelling Up are putting all this pressure on us, right, to push people out of B&Bs. And, you know, my concern is, like, does that pressure, does that need to hit targets then actually negatively impact people, whether that's not giving, you know, making people intentionally homeless, or whether that's putting pressure on domestic violence survivors, for example, to not use up bed and breakfast accommodation. So I guess it's just wondering how, as a department, we're not just implementing this plan in a way that is kind of overly judicious, which actually then ends up, you know, harming our most vulnerable residents.
I mean, a strong emphasis on our plan really is about other supply. So we don't want people to be in B&B, not necessarily because government don't want us to, but because we don't think it's a good place for people to be. So, you know, a lot of the actions in the plan and the work that we will do increasingly is about other forms of supply, because we think, you know, we will be vulnerable as long as we're really heavily reliant on a private sector that we can't control. So developing lodges, looking at buildings that we can convert, etc. So obviously we need to monitor it, but this isn't playing as a let's kind of reduce our duty to people. It's more playing as a what supply options can we have to make this a better option for people.
Just to say, I think being in B&B, especially as a family, is the worst situation for that family. So I don't think I think the driver isn't just government pressure on this. It's absolutely that I think politically, I would definitely see it as a priority that I don't want families living in hotels at all, if possible.
Can I just move to some of the actions in the actual plan itself? So on page 23, it talks about the multi-agency homelessness reduction board, which I think would have had its first meeting last month. So wondered if you could say a bit more about that board's work and the agencies that are involved.
I can start because I'll chair that. So we had our first meeting. Agencies that were there: probation, citizens advice, housing associations, police, probation. Who else was there?
Both bits of social care.
Yeah, all of the council
Yeah,
side
so
of things.
internal partners and then
Yeah.
external
Yeah.
advice agencies.
So we're meeting 3 weekly to try and work together on this. And I think probably definitely probation service and definitely the registered providers have a big role to play, I would say. And so to make it clear that this is much bigger than just a council issue. It's an issue for all our partners, and to make sure that we're all actively engaged on reducing the homelessness. We met for the first time online. Next meeting is going to be in person. I hope there'll be a little bit more personal interaction, a little bit more engagement. I think we're going to do a few sort of activities to get a bit more engagement and thinking around the table. So yeah, I think the first one was good though. I thought, yeah, it's a good start, and let's see where we go with it. Ask us at the next meeting.
So is that quite new, or maybe could have been done more before, but hasn't been, in terms of actually getting everybody together, the different agencies?
We've had meetings in different kind of formats over time. I think it fell away a bit during COVID and didn't necessarily get picked back up again as quickly as it could. Having homeless reduction boards is seen as best practice, though it's not a requirement currently. So we wanted to get ahead of that and get a homelessness reduction board in place. I think this, compared to things we've had before, more genuinely was kind of multi-agency, DWP, a whole range of partners. And I think that sense of it needing to be a shared challenge, in some ways, that's very much what the plan requires as well, that it's owned corporately by the council, but then by our partners as well.
And then could you just clarify the action about reducing prohibition notices on page 27 at the top? And yeah, I don't know what that means or how it would help contribute to the target. So
about working together with the private sector team, so if they serve prohibition notices, then it can mean that people end up homeless down the line. So just doing what we can to work with them to kind of get the works done. But I could maybe send a little bit more on that, if that's helpful.
yeah, that would be good. Thank you. So that's is that working with the landlords or working with the tenants?
So a bit both.
Okay.
So doing the work with the landlords so that we can get them to do the works, rather than, because quite often our private sector team will do works in default. So helping out with that initially, and then the money will come back from the landlord in the future. But I can maybe send something specific on that.
And just to say, we also have a landlord forum, which is meeting beginning of next month, February. We're still in December, aren't we? And just feels like January. Trying to, to really encourage the good landlords to work with us in these sort of situations, exactly. And I know landlords get a bit of a bad press, but they're very important in the borough as well for lots and lots of people. Yeah.
Any more questions on this item? Councillor Bevan?
Assuming you'll be disappearing after this item, is because I've got a general point that I'd like to raise before you disappear about the framework procurement agreement.
I'm not disappearing. I'm not going anywhere. I think Denise is.
Well, I'll raise it now anyway, because yeah. So the framework agreement, which is crucial to getting all our housing estates rebuilt and etc. The original sum to be spent on that agreement was over £1 billion. It was £1 billion and 8 million. Now we've reduced our capital spending by 396 million budget wise. So that's gone down to about 3/4 of what it was. Now, I think the original proposal was to get 4 people on that framework, 4 companies. I'm asking you to consider 3 companies because of the reduction in the amount of works, because I don't think the amount of work now will be a big enough incentive to get 4 companies on that framework. So I'm suggesting, as you give some thought to reducing it to 3, because those companies are crucial for apprenticeships, doing bonus work for us, like doing up residence centres at their cost sort of thing. So I'm just asking you to consider that, because of that huge reduction in the capital spend, that you consider that.
Hi, thanks, Councillor Bevan. I mean, I think it's worth saying that the adjustment in terms of the overall budget for the partner and contracts, I think came in the previous budget round, and I think actually in this budget round we're proposing to sort of bring forward some more spent early in the MTFS period, but so that's worth saying and stressing. So we're not backtracking in any way in terms of the proposals before you tonight. Quite the opposite, I would argue. But I think on your point around whether we go for 3 or 4 major contractors, it's a well-made question, because obviously we want to make sure that we get the best contractors who are really going to put roots down in the borough. We are, even at the level we're talking about, we're still getting a lot of interest, and I don't think the size of the lots will be too small by any stretch of the imagination. I think all the big players are still talking to us. You will recall that the original reason for the split was about the sort of different geographical areas, and I think we still think that stands, but obviously we'll continue to engage the market and take soundings, and if there are any concerns about that, we can adjust. But at the moment we're getting the sense there'll be a lot of interest.
Thanks. We'll have one more question from Councillor Hymas, then we'll move on.
Obviously, a big part of this scheme is reducing the number of voids, and I know we spoke about this last time. I guess my question would be, does the ongoing industrial action from the repairs workers having an impact on our ability to reduce the voids?
Yes. When they're on strike, they're not doing any void work. So yeah, nobody wants to strike.
So do we have a kind of solution to bring the action to the end? Have we met with them to discuss possible solutions to this?
Yeah, there's meetings happening in January.
Is there a reason the meetings didn't happen before that point? Because obviously they've been taking action for a couple of months now.
So the 2 main reasons for their strike were our nationally negotiated terms and conditions, and that settled about halfway through the first set of action. So we didn't really expect this to continue, hence had set a date of January to sit down and talk with them, and we've guaranteed those asks to them, but we're still in the situation we are, unfortunately.
Did their asks change following the settlement of the national negotiation, or so when they first went out, was it always them looking for a national resolution, or have they shifted to have more of a focus on local resolutions in recent weeks since the settlement?
Yeah, I think I understand what you're asking. They're asking for a local, it's a London weighting issue, so that you could say that's a local issue, but that was negotiated for nationally, and also an annual leave position, which was part of their original strike, was settled nationally also. Yeah.
Okay, let's move on to the next item. So yeah, we've got the budget scrutiny item. Is this going to be introduced by John and Casey? John, thank you. And thanks very much, Denise.
Good evening. In your agenda pack, this evening, you've got quite a lot of information about the council's medium-term financial strategy. The paper asks you to consider and comment on the council's 24-25 draft budget and 5-year medium-term financial strategy and any proposals relating to the scrutiny panel's remit. On the 5th of December, Cabinet received a report, which was the draft budget for 24-25. That disclosed that the budget gap still at that point was something like £16.4 million, which is not something that I think the authority, not a position the authority has been in before. This reflects the wider pressure on the sector that we have in terms of inflation going up, inflationary increases, demand on services, the cost of those services going up for the reasons that you just heard, say, from Denise on temporary accommodation. We have the same issues in adult social care, children's social care. So the budget is at the moment not balanced. We're going to continue working between now and February to deliver a balanced budget, which we have to do by law. So it's in that context that you need to really look, I think, at what the budget proposals are, just to see, to look at them, scrutinise them and see whether or not you're content with them for the remit of the panel. So this position of not being balanced is a lot worse than we thought this time last year. And again, for the reasons outlined, adult social care expenditure, which if you look in your pack, you will see that the in-year position, on the cabinet papers rather, in the in-year position, is about a £20-odd million overspend. Now, luckily, in this particular area, we're looking at having a balanced budget for this financial year. There are pressures that are being managed, and I think Jonathan's area particularly has a lot of pressures around business rates, around having to do repairs and maintenance, hard FM, and a whole raft of sort of issues that he's contending with. I know Rob's got some pressure on his planning budgets in terms of planning for income, whilst I think Rob's experience is that whilst we might be having a lot of planning applications, we're getting a lot of little planning applications that don't generate the amount of income that a large application does, but they still take quite a lot of resource. So sort of proportionate that you spend more time on the little ones than you do for the return you get on the big ones. And that just translates into a budget pressure for him. But as I say, overall, David's area is containing these pressures. As I say, so at Q2, we're looking at having no adverse variance. Now, in relation to the council's budget as it relates to this area for 24-25, there's not much by way of any proposals which are of a policy nature. So the budget was split into management actions and policy changes. So where a director could, through the normal course of their budget arrangements and their management arrangements, make changes that brought forward reductions in expenditure. These have been noted in the report, and they are noted at, forget now which paragraph it is, which section is it? There's so many tables. Oh yeah, on table 7.2C, management actions, you'll see that there's about just over £1 million of management action that David's undertaken in his area. The large majority of that relates to a reorganisation within the regeneration and economic development arena and business unit as such. And that's something, I mean, if you have detailed questions on David, we'll be able to talk to that. We have no actual policy, new policy savings being forward from the area. Sorry, I'll just close my screen down. So unfortunately, in that area, there's nothing for you to scrutinise. So that's the revenue. I think that covered the revenue position. Do you want to do general funds and then housing revenue account? Would you prefer that we did the general fund first and then the housing revenue account? Yes. Okay. Right. You'll also see within the papers the draft capital programme for 24-25 onwards. That's when we looked at that and compared March 23 to now, there was something like £396 million reduction in the capital programme. Two reasons for that. Obviously, there's the cost issue in terms of interest rates going up and inflation in the construction industry. So we needed to look at it from that point of view, because in the budget report, you will see there's a line called one of the tables called finance, and that line grows, and that's the financial effect of the capital programme and some other matters. And also we're looking at this from the point of view of external scrutiny. There's an increasing scrutiny of the local authorities' levels of debt, following on from the various Section 114 notices that have been issued over the last 18 months, 2 years. So again, we wanted to look at that. And even after allowing for the reductions that we've made, we're still somewhat of an outlier in terms of that. And there are reasons for that. So for instance, one of the contributing factors to what looks like our debt going up is the High Road West scheme, where we have a considerable budget, but we know that we're going to get that money back from Lend-Lease, the developer, as the scheme builds out. But that's not something that we can reflect in the metrics that are being looked at by Office of Local Government, Treasury and SIPFA. So we've done all of that. Now, even though we've made those reductions, we are still looking to reduce it further. Again, because for every £1 million that we spend on capital in the general fund, it costs us around about £72,000 in debt charges. So for every £1 million we have that budget goes up by about £72,000 on average. Okay. So I think I'd like to, if that's okay with you, I'd like to pause now on the general fund and either take questions or hand over to Casey.
Questions all in one go. So
Okay.
can we hand over to Casey, please?
I'll refer you to page 50 of the documents. That's the HRA session. I want to start by saying that the HRA is not immune to the current economic climate. So as such, HRA is facing almost similar challenges with the general fund. If you go to page 50 of the documents that you have, that tells you a little bit about, is a snapshot of the Q2 position of HRA in terms of in-year pressure the HRA is facing. Hold on a minute. Okay, yeah. So if you look at section 6.5 on page 50, that's a snapshot of the in-year pressure the HRA is facing. So at that stage, we are forecasting that the HRA will be overspending by about 1.6 million, which is a slight improvement on the Q1 position of 4.279 million. And it's improved that way because I think it was September, we took a paper to cabinet asking for 3.6 million to be drawn down from reserve to enable us deal with the issue around disrepair cost and void. And largely our pressures are largely from those areas, legal disrepair, void issues. But the good thing is that these works since Q2 has been progressing, and we're hoping to manage these pressures in the HRA in year. However, we still have challenge for next year's, which is what you're going to be looking at. That's the MTFS period from 2024, 25 to 29. So if you go to page 94 of this document, section 9, that's the HRS section for the current MTFS periods or MTFS proposal before you. Now, the HRA, for the first time in many years I've been here, we've always come to December cabinet with a balanced HRA, except for this year. And balanced in the sense that the 5 years MTFS period is always, because we set an arbitrary sum of 8 million surplus, or what we call revenue contribution to capital in the HRA. So the way we model the HRA is such that the HRA always generates that surplus, that level of surplus, and not below it year on year. But for the first time, we've come with a HRA that has that level of surplus in next year and the year after. But the subsequent 3 years, the HRA surplus falls below 8 million. But what you don't see within the what is presented to you is just a 5-year snapshot. Beyond that, around year 10, the HRA actually picks up again and recovers. But that is not ideally where we want it to be. So to make sure that our HRA continues to be viable, we put through some proposals in this current MTFS. The reality is that this position would have been worse than you've seen it here. We've embedded those proposals into this, and that's why we have 2 years of surplus above 8 million. And those two proposals are in page 97, section 9.25. The first one there is on rent flexibility. So by rent standard, we are allowed to charge 5% on top of formula rent for new tenancies. So we're proposing that for new builds, homes that are just completed, instead of charging social rent, formula rents, we charge formula rent for plus 5%. And ideally, you look at the difference per weekly is about £6 something a week. So additional income to help keep HRA sustainable in a very now and in a very long term. And then on page 99 is the second proposal, section 9.43, which is about service charge. You recall last year when we came to cabinet with service charges, we capped our service charges at 10%. Meanwhile, at that same time, the CPI was going at 11.1. So what we are saying here is that we are proposing to recover the full cost of service charge from tenants. So instead of capping it, we are going to be charging the full CPI, September CPI, which is the basis of increases or inflation that we have in the HRA. So with those two proposals, we were able to present to you a HRA that works for next year and during this MTFS period. So you can see the table of our HRA in page 104. There's a table there. We score the drafts HRA 5-year revenue budgets. And if you look at the second to the last row where you have revenue contribution to capital, that's the 8 million figure that I'm talking about. So next year, 2024, we have about 8.8 and 10.29 for subsequent years. And this is after application of those rent flexibility and service charge full cost recovery. And lastly, I will bring your attention to the table on page 105. That's the HRA capital program. Yeah, capital program. Our capital program hasn't actually diminished. One thing we have done in this iteration is that we've continued to allocate sums. We've continued to increase our investment in our existing stock. And we've also carried on with our new build home programs, because when we did analysis of these issues, these weren't an option for us at all to reduce them, because in the long run, and that is why I did say that beyond 10 years, you see that the HRA advances. In the long run, investment in our stocks and investment in our new builds helps the HRA in a longer term to be much more robust and sustainable. I think that is it for the HRA. I'll pause here for questions.
Thank you. Before we go into questions, would David or Sarah like to say anything? Don't have to. No? Okay. Let's move to questions to begin with then. Yep, Councillor Harrison-Mullane.
Thank you. I just want to note that at the start of the report, it says that legal disrepair claims are the main cause of pressure on the housing revenue account, which is obviously something that none of us want to see. And I'm sure all of us can think of examples from our casework where residents have pointed out problems and that taking legal action really is a last resort, that at times doesn't even particularly benefit the residents because of large fees charged by lawyers. It's obviously been quite a while now since the housing service self-referred to the regulator. I wanted to ask what trend has been over recent months in those legal disrepair claims, and maybe more detail about what action is being taken to reduce them.
Hi, thanks for the question. I think we covered this last month, didn't we? But there's a new process being adopted within housing, so that things don't escalate to using external lawyers as quickly. So that only comes in at a much later stage. So most of the work through appointing extra resource within the teams is done within the teams. So therefore we won't have such a need to use external resource in that space. And there's a plan for that, which I don't have to hand, but do you? Yeah.
Yeah, I think the critical move as part of that plan that you're referring to is is making sure that we use the pre-action protocol to try and resolve claims before they progress into the kind of full legal process. I think that's a critical area where we want to try and stop them from escalating there and do the works earlier. There have also been dedicated management resources recruited to solely focus, who have begun in the last 2 or 3 months to solely focus on legal disrepair, and actually really take responsibility for doing the works, so that hopefully these cases are not in the hands of solicitors, but actually in the hands of resolving the problems, which, as you say, residents would rather avoid getting into a lengthy legal process. And we want to support that by increasing the resources within the team that are dedicated to this. It is worth saying, and this I think did come up when we came previously, this is a London-wide and national trend, a huge sort of escalation of legal disrepair cases. I think there is much greater awareness now about that process, and more and more residents are unfortunately feeling they have to resort to that. But the kind of escalation that we've seen in Haringey is replicated elsewhere, and we were probably a bit slow at responding to sort of bring in dedicated resources to get on top of it. But the service are absolutely doing that now, and hopefully this will start to bear fruit for us.
To that, estates and street properties are leafleted, and the leaflets look like they're coming from the council. So it's quite an aggressive campaign to get work to those firms as well.
Can I just add to that? Sometimes those leaflets are quite misleading as well, and almost encourage people not to actually report repairs in the normal way and actually seek a resolution through that route. And so I would ask anyone engaging with residents to really encourage residents to come to us and actually get their problem resolved first and foremost. Obviously, would never discourage people to go down the legal route if they've got a complaint, a claim, and we'll try and resolve that. But first and foremost, if people can share the message that the council's here to try and deal with the problem and deal with the issue that is obviously causing residents distress.
Thanks for that. That's really helpful. I just wanted to ask more about the timeline. You mentioned that dedicated resources come onto this in the last 2-3 months. What are we doing to monitor the impact that that's having? And do we know how many of these kind of cases are being prevented?
I think we do have all that, but just not with us this evening. I thought it was presented it before. Was that a different meeting?
Yeah, we do. We did take. Yeah, yeah. And it is one of the issues that obviously the Housing Improvement Board has been looking at as well, and we are looking at it as a management team in the monthly update that Jahed brings through and reports, and we're happy to share performance data on this if the committee wants future reports on the topic.
Thank you. Councillor Bevan, you had your hand up.
Was the legal
Did you want to come back on this specific point?
well, I've got. Yeah,
You did as well. Okay, take it in turns.
Well, the legal disrepair, just a bit more information. I mean, we've appointed 3 legal firms, which was signed off, and I think that's costing, I've just got the file here, 3.6 million. Something is costing a fortune anyway. Those legal firms are costing us a fortune. It's in the millions. So it's really important. That's without doing the work. So it's really important that we get that issue sorted. But I just wanted to say I'm fully supportive of the 5% flex that you're talking about of the rents. I'm fully supportive of charging the service charges what they actually cost. Why we haven't done that in the past, I really don't know. But what I want to ask the question, so this will obviously put up the rents to some tenants, and the service charge will go up as well. So you're then talking about setting up a fund to help tenants who get disadvantaged by this of £20 million. Now, what I don't understand is if a tenant can't afford these sums, they will already be getting housing allowance. And if this takes some new tenants into that field, they will be applying for housing allowance. So what I don't understand is why are we setting up a fund to help these tenants with this extra cost, when in theory it should be coming from the government through the housing allowance claims from each tenant?
The fund came out of, and it's not 20 million, I think it's 300,000, came out of the energy crisis last year, and what we could do to help tenants additionally to all the financial inclusion support that is on offer. And what the team did is they've identified tenants who are falling into rent arrears to try and prevent them getting very behind with their bills. So to have a fund available that can be targeted towards those tenants. Is it, we want to add any more to that?
Robbie, do you want to come in? Robbie Erdman's online.
Yeah, so I think broadly there are two categories of people who obviously, you know, won't be covered by benefits here. The first is a group of people who may already be benefit capped or may be benefit capped as a result of these proposals. In terms of that, is single digits in terms of the number of households that would be benefit capped as a result of these proposals, but nonetheless important. I think the second category obviously is the people who do pay their rent in full, or you know, and those people who do pay their rent in full themselves, you know, it is a very difficult time. Some of them are on very, very low incomes, and we felt it was right to offer a fund with some support. It certainly won't be 20 million. We haven't yet formally settled on a number, but there's the sort of number that Councillor Williams just mentioned is a sort of number that we're looking at.
I'll just clarify. I think the 20 million has come from the wording because it's proposed that this be funded from the 20 million pound HRA working balance, but it's just saying it's going to come from the overall HRA working balance. Not that it, but it doesn't say what the amount proposed is to be anywhere in these documents, I don't think. So it might be helpful to, if you could locate where that is in the budget, if it does appear somewhere for us.
We've not yet proposed a figure. That will come in the February in the second round of the budget papers.
Okay, thank you.
Yeah, well, I hear what you say about the people that are benefit capped, which is not a large number. So I understand we might decide to help them, but I just reiterate the point. Anyone who has problems with their rent or service charges, that help should not be coming from the council. It should be coming through the housing benefit system, not from the council.
Yeah, I hear that. Just to say and on the flexibility, that's only for new let as well, of course. It's not anybody sitting, they're not suddenly going to get that additional 5% rent increase. It will only be for new lets, so it's a limited number. And those new lets are all, as you know, because of the formula, already at probably a different, usually rent to what they're paying wherever they are, which might be higher, might be low. Yeah.
Councillor Hymas.
Yeah, to come back onto the legal disrepair, I mean, it's first worth noting that already to P6, as I understand, the amount that we've spent this year has gone up on legal disrepair. So it was 1.685 million, and now it's up to 1.75 million. The year's not ended, so it's a huge increase. But notably, in the 22-23, we spent around £400,000 on internal legal support, and that's dropped to £62,000 so far this year. So I'm wondering, even though the stated goal in the legal disrepair area is to move away from our dependence on external solicitors, it seems like we've become more reliant on them this year. So my question is why is that? And are we going to take a kind of big leap forward to try and remove our reliance on external solicitors, given where we're at this year?
Yeah, I mean, I just to say that I think going back to what I said earlier, that the intention is to stop cases even getting into the legal process in the first place through this pre-action protocol, and that will actually be through housing officers and the housing team. At the moment, pretty much all cases go straight into solicitors because of the sort of process that we were following. Because you need to remember that in previous years we've had far fewer cases, and that was the approach that was sort of taken as standard. But given that we've now got so many more, unfortunately, it doesn't feel sensible to follow that route. And through the pre-action protocols and the housing officers getting involved far earlier, the idea is to stop them getting to any kind of solicitor, whether in-house or out-of-house. I think there are issues as well around, and one of the reasons there may be that higher reliance on external companies is around recruitment and retention of solicitors, because the market is so hot for these. Because as you can imagine, with the cases growing exponentially in every council, specialist solicitors with these kind of skills are in more demand. So I think there have been real issues for the legal service to find the in-house solicitors, which would always be the first preference.
Can I just zoom out for a minute? So we've got the next sort of trying to actually balance the budget round coming in February. The proposals we have in front of us right now, the housing and placemaking budget, it seems already quite trim. There's some slight management savings being made and then no growth forecast over the next couple of years. So I suppose, could we be looking at, you know, having to make more savings from this particular budget? Is this one of the areas that's, you know, being considered for potential further savings? And then just to be really clear, the HRA account, that's completely separate, so that won't have any material impact on trying to close that gap in our general fund. Is that right? So that's just kind of doing its own thing, looking after itself. Okay, so we're not going to have to relook at the HRA come February. Is that correct?
Chair, there's going to be, we've just talked about the tenant support here. So there are a few things that we'll have to look at prior to February. Yeah, but I don't see HRA changing significantly from what it is. And as you also know, some of the assumptions we built in here is the interest rate assumptions. And if recently, in the past week or so, there has been changes in the market. So we'll see how that plays out. And yeah. Thank you.
And in answer to your first question, not all services will be required to make a contribution, or to look to make a contribution to balancing the budget in February, including, as I say, the earlier general fund capital programme.
Can I just go to page 43? Sorry, I just need to find it. Okay, yeah. There's a slightly confusing sentence because it says there are pressures in corporate property and operational resilience, but it's a favourable movement, and I think that's similar for the in both of those sections. So is that saying there's still overspend, but just less overspend than we originally thought? Just to clarify that. Okay, got that. Could you talk about the head leases saving that wasn't delivered and why that's considered not deliverable now?
Okay. Landlords who have these leases, they are in effect in receipt of a tenant of very, very high credit quality, as in the council. So from their point of view, why would they give up such a guaranteed income from a very reliable tenant? Because if they did give it up, they would take that money and they would go and look for an equivalent return, but that equivalent return is going to be at a risk because nobody's as risk-free as, you know, government debt, and we are. So when we approached them, I think some of them said, okay, we'll agree with you, but we'll tell you what the price is and we're not negotiating. And then others said, well, this is the, you know, and others just said, no, we're not going to be doing it. And so in light of that, that particular saving was written out of placemaking and housing in 23-24 and has been taken out of the budgets going forward because we're not going to achieve it. But,
Councillor Hammers?
Could you just talk me through the Lend-Lease High Road West arrangement that you've got going on? And do you think there's any risk there?
Okay, I mean, there is a very complicated and complex relationship that we have with Lend-Lease. It's governed by a development agreement, which I think was signed in 2017 or agreed in 2017. The element that you see in the capital programme is where the council is using its compulsory purchase order powers to acquire properties pursuant to a CPO order, because the council is the only body that can do that. So Lend-Lease can't do it, so we have to do that. So we go and we've acquired properties on the Love Lane estate from leaseholders, which we bought back from them. In the interim, we use them for temporary accommodation. And when a particular phase of the High Road West scheme goes live, because it's split up into a number of phases, we get reimbursed the cost that we've incurred on the acquisition of those properties in that phase when we grant Lend-Lease a lease to build out those properties. So over time, we grant various leases at various phase stages, and then that money will come back to us and pay down the short-term debt that we've incurred in meeting that our CPOI obligations. Is that, yeah, okay.
Yeah, is there any risk that Lend-Lease could, for whatever, global financial circumstances, is no longer profitable there?
Yeah.
What's their responsibilities?
So where we're at the moment is that Lend-Lease High Road West is a company that's been formed to deliver the High Road West scheme. That is guaranteed by Lend-Lease, I'm sure the name, but Lend-Lease Australia, the big parent company. And the council relies on the strength of that covenant to continue with the transaction with Lend-Lease High Road West. Now, I'd like to say that it's completely risk-free, but that would be silly. There are always risks, and we seek to cover those risks as far as we can. And we have a number of protections built into the whole process. We rely on a parent company guarantee from High Road West. We have step-in rights to the various contracts when they're let. So in a particular phase, Lend-Lease will let a contract to a builder. We're obliged to pay and all of that sort of thing to Lend-Lease so that they can meet their obligations. But should Lend-Lease default, then we would have step-in rights, as we do with all of our other major contracts, to step in and conclude and build out the development. Obviously, that's not an ideal solution because it's invariably costlier for you to step in. We also have, when we are going through the process, a viability assessment stage. So each phase of the projects, each phase of the development, as we put phases through, parcels of land through, is subject to this viability assessment. That in turn is tested by our external viability advisors, our commercial advisors that go with it. And we also have a suite of protections lined up or enshrined in various documents that we have with Lend-Lease that govern the way that they can actually deal with and build out the properties and what they can do with grant, when they can do it, and a whole raft of sort of normal contractual relationship. But like anything, it is not completely risk-free because it can happen.
And I think also one of the things implicit within your answer, John, is that it is a phased development. So, for instance, the very first phase is a relatively small plot to the west of the railway line, which will see, I forget the number of homes, 61 homes built. So that's effectively the first phase. And at that point, that's the level of our kind of exposure if things went wrong. So if we had step-in rights, it would be on those homes. But yeah.
Please, could you give more detail about the restructure in regeneration and what impact that's going to have on the service?
Yeah, thank you. Well, first of all, it's one of the few remaining areas within regeneration and economic development which is not funded from external grant income, from capital or from HRA funding. So it was one of the few areas left to turn, really, because I think, as somebody noted, I think it was yourself, Chair, it's a fairly slim budget overall in placemaking and housing. So this was one of the areas that we naturally had to look at, given the financial position of the council. The main area of savings that we've been looking at has been around reducing management costs. So we have reduced the numbers of heads of service, for instance, by consolidating down into sort of one head of inclusive economy that will oversee all the different functions within that team, from economic development to Haringey Learns and Haringey Works. Previously, there were 3 heads of service, for instance. We will be coming forward with a subsequent restructure to look at the subsequent layers within that division as well, reducing management costs, but also moving towards more of a sort of enabling role, working with traders associations and other organisations on a more sort of relational approach, so rather than doing sort of direct delivery of events ourselves as a council, which is, I think, necessary, but I think also could lead to an improved offer for some businesses by getting sort of people like Wood Green Business Improvement District to lead on more themselves. But unfortunately, given the financial position of the council as a whole, we've got less money to spend in this area. We will still have a good level of resource, though, compared to with most councils in terms of the economic development space. I think that's worth saying.
Councillor Bevan.
Yeah, a couple of points about the general fund. I mean, the government today has announced 6% uplift for councils for the coming financial year. Does that remove our 17 million deficit? And then the second point is, I note in these papers the council tax is set to increase by 2.99, but in the years after that it goes down to 1.99. I don't quite understand that. Why has it gone down to 1.99? Because no way is that going to happen. So
Okay, as regards to the settlement that's been announced, that level of funding increase is no different to what we've assumed. So when the government talks about saying there's 6% increase in local government resources, that includes the council tax increase. So they're not actually giving very much that we haven't already factored into the budget. So it's not going to help us in that way. What will help us, or not as the case may be, could it quite equally go the other way, is if they've changed within that overall sum how they distribute that sum. So those methodological changes, those distributional changes, they can impact us, and we're just going through that now, because it's quite a very complex document, dense, and you have to be very careful to make sure you compare apples and apples. And so that work is being done now, but we're not anticipating that's going to make a material difference to 24-25 MTFS position. As regards to 1.9 as opposed to 2.99, I would have to go and I'll have to write back to you on that particular issue, because I'm not sure why that is the case, that it's gone down to 1.99.
I did have another question on the housing revenue account. I'm just struggling to find the table I wanted, so just bear with me, sorry. Casey, where's the table with all the proposed growth over the next couple of years for the HRA? Oh, is it page 104? Okay. Sorry, I think I found what I wanted to ask about. It was just the capital financing costs in the revenue budget for the next 4 or 5 years. That's obviously one of the most significant costs. I wondered if you could say about what that is actually, what the breakdown of that big figure is, what's included in that. You turn your mic on, please.
sorry about that. It's basically the borrowing cost, the cost of financing our borrowings. And based on the assumptions, because we have the Council's Treasury Advisors that enclose, they quarterly give us updates where they think the interest rate will be. And based on our portfolio of borrowing, not just in 1 year, because we borrow for a long time. So we aggregate all the loans at different times and the interest rates applicable. That's how we come up with this figure. But to give you a snapshot of why the rates are going up and are quite huge, is you need to look at our capital program. That's the page 105, the HRA capital program. So we have very huge investments of about 1.4 billion over the period. So, and the assumption for next year is that we'll be borrowing at 5.1%. And next subsequent 2 years, 5.5, 5.5%. This is what I was saying, that based on the interest rate falling now, we'll go back to them and see whether those assumptions will change or whether they still feel that it's just a blip. Don't change it because we think next year it will go up again or it will stay at this level. So based on the interest rate assumptions we apply on the borrowings here, that's where you see those figures coming from. So they're basically interest on borrowings.
So it's all about essentially servicing our borrowing.
Servicing our borrowing,
Okay,
yeah.
got it.
Can I just ask you to bring Robbie Erdman in?
Yeah.
Yeah.
Do you want to come in, Robbie?
Yeah, I did just want to say something, because obviously we do have those borrowing costs that do go up quite substantially. But what you don't see is that, and this comes in really in sort of years 6 onwards, is you start seeing very significant income that comes in to offset those borrowing costs, which through the sort of new build housing delivery program. So while there is, very significant borrowing costs, in this bit of the plan, that does make years 4 and 5 particularly difficult. Over future years, we actually see real growth in income, and round about year 10, we're looking at sort of £20 million surplus. So there is while there is a lot of borrowing here, it does result in an upside.
Thank you. So is it fair to say that, and obviously everyone here wants new council homes to be built, so we accept that there are trade-offs, but is it fair to say that those substantial borrowing costs are the main driver for needing to take measures such as the rent increase and the service charge increase in order to make the HRA viable? Is it fair to say that that's the main driver?
Sorry, is it me on case? I'm happy to answer. I don't think it's the main driver. It's one of the drivers. I mean, another. Oh, sorry, yeah, it's one of the drivers. However, the other big drivers have been, the sort of below inflation rent increase from last year is a very significant driver. It's our costs have, our sort of revenue cost base has risen quite significantly. If you look, and I think the key thing is also the need to invest in our stock. And so while there's just under £1 billion worth of investment in housing delivery here, there is also about £500,000 worth of investment in our stock, which is badly needed, and we would be unable to finance that without the future income from the housing delivery programme.
Thank you. That brings me on to a similar point, actually, because obviously the major repairs reserve is there also to look after our existing stock. And I just wondered if the amount that we've allocated for that in the next couple of years going forward is sufficient in terms of the amount of work that needs to be done across our estates.
I just want to come in that that's something I've been very keen on, is that the new build isn't at any detriment to major works on our existing stock. But of course, new builds are self-financing, so it's much easier there. But it's a huge investment in major works And also you could argue that all the Broadwater Farm works, all of it, not just the new build and the works, are all part of a huge investment in the entire estate there. So I think the major works programme is very important. It's unfortunate, I think, just because of this, we're discussing the 5-year MTFS, but actually the 10-year plan does give a better picture of that investment going forward, I think. So you can see how it does better in future years. You know, half £500 million investment in stock's not bad. And once we've got the framework in place, we can get on with it as well, which is good.
Councillor Hymas?
Yeah, I had a question about the plan to move some leases into homes for Haringey to avoid the local housing allowance cap. I just wanted to know how that works, because obviously with the insourcing of homes for Haringey, but then we're also actually moving the leases under them, and whether that causes any organisational issues within the council.
Yeah, you may not recall, but at the time that we insourced Homes for Haringey, we actually retained the legal entity Homes for Haringey for the purposes of retaining these leases, and we obviously got legal advice at the time that we reported to Cabinet that that would still allow us to get around the issue that obviously we couldn't charge the full amount if we did it through the council. So it would allow us to basically go all the way up to the LHA rate. So that is still in existence in effect, basically. So we still have Homes for Haringey as a retained entity to oversee the management of those properties. What I would say is it's been difficult to deliver the original objective because of the reduction in supply of properties to the market more generally. I think, you know, Denise was reporting earlier that there's a huge problem about landlords withdrawn from the market. So we haven't got as many properties in that mechanism as we might have anticipated, but it is still in existence.
The ghost of Homes for Haringey lives on.
I will say only for that specific
Yeah,
purpose.
does it employ any staff, or is it's literally just?
Well, it has a company secretary as required by certain companies law, and there is a board of directors appointed by the council, who are basically council officers that have been appointed as board directors.
I had a question about proposed savings as well. And yeah, I think that's what I was going to move on to. Need to find the right page. Right at the bottom.
Basically, just from the end.
Yeah. Yeah. Yeah, can we ask about the new revenue savings proposals? It wasn't me that noticed this, but a colleague noticed that some of these appear to be repeats from what was proposed last year. Let me find an example. So the third one, number 6 as well, and number 7. So
3 is to continue to do that. We'll deliver that saving.
yeah, we're on
6. Okay. I don't think that's well, it's a more, I mean, I think, I'm not sure about the repetition on 6, but that we really engage with those families. We talked a bit when Denise was here about barriers to moving on. So it's really to get that holistic, find out what's the problem and really work hard on that. It's not been an area of focus so much in the past, not with a project officer.
Okay.
And 7. Is this on? I think that's one we've just spoken
Yeah,
about.
we've just
isn't it?
spoken about
Yeah,
that.
yeah.
But just to sort of check on the status of those, is that things that we've already, sorry, what? Oh, 121, 122 on the new revenue savings proposals.
Appendix 5.
Yeah. Just to check on the status of those, is it we did do it last year but didn't deliver it, and so now we're proposing to do it this year, or is it we did it last year and we can do it more this year?
On which one?
I guess any of them. Just
So
in terms of the principle of having a repeat saving, I
So I
suppose.
think there's I have to say I wasn't aware that a project officer was a repeat on saving 6. Saving 7 does sound a bit repetitive. I think I'll let David come in on that one. And 3, I think that's, as I described, it's just a continuation. It was something agreed last year. Yeah.
On the sort of mechanics of that, I suppose you'd kind of expect that to now be incorporated into the budget.
So it's an additional savings. These are additional savings. Even if they have the same theme, they're additional savings, yeah.
Did you want to add to that at all, David?
Well, I mean, just to say, I think on saving 7, it just reflects the fact that we're getting new leases, which we're transferring to the company that then delivers an additional savings. So that's why it's sort of we can achieve further savings basically.
Presumably that's the same principle for number 3 about the 1-bed social housing, because it's more properties that are coming online. Is that right?
Yeah, sorry, with Denise not being here, I'm not sure about that one. So I think we'll probably provide a written answer on that if we get Denise to provide number 3.
Please, could you just say something about the one regarding unlicensed premises, breaches to the Housing Act, and are we just sort of intending to do more enforcement? Like the rules haven't changed, but we're trying to crack down on it more to award more fines. That's the last one on page 122.
Councillor Williams, you might not recognise that. No, I didn't think you would. Because that lives in the environment of resident experience. That function, it's a regulatory function.
Yeah, I think it's actually, it is mine. It's private renters, isn't it? That's it's the private renter.
So it's a greater enforcement. We're putting a further approach focus on enforcement to partly generate that money.
So that's all within the remit of the licensing schemes. Yeah. Alzheimer's.
Yeah, so on the point about the repeats, I think from the kind of same issues, we were trying to save like 81,000 last year on private sector lease conversions, and then I think 400,000 on targeting families that have been in temporary accommodation for a significant number of years. I'm assuming that all of those savings have been delivered or will be delivered this time round, so that those further savings that we're talking about in this budget will similarly be delivered based on those projections.
The project officer's the new one, and that specific one. I mean, I don't have. I'm not aware that we wrote up any savings. I think they were all delivered, but I'm not. I wouldn't my life on that. Within this space, though, I think they were delivered.
If we could get like a written update on whether those savings, which are repeats or very similar to last year, were delivered, that might be a helpful thing to take away.
I was going to say, in the quarterly budget monitoring reports, we do have a savings tracker that will tell you what's going on with those particular savings that have been previously agreed. And that deals with the savings achievement in 23-24. And to the extent that they're underachieved, it will show you that effect going forward. And that will be incorporated into the 24-25 budget. So when we've made an assessment of that, but that's where you'll find the information.
Just on that landlord licensing savings target, how was that target amount calculated? Is that because that's just £13,000, right? And I think CPNs are quite a lot more than that. Like one CPN can go up to 30 grand, I think. So yeah.
That's as it says there, yeah. So I mean, a prudent approach has been taken to this. I think the difficulty that we have with this type of enforcement, these type of fines, is that they're very difficult to enforce. Unlike, say, like a fixed penalty notice, which you'll get from car parking infringement or infringement traffic regulations, there is a process, and that runs. With these, if I remember correctly, we can't actually just enforce in the way we do fixed penalty notices. We have to go through a different court-related process in order to enforce those. So this is taking a very, very prudent view of what will be generated through further enforcement action.
So in reality, I mean, that sounds like maybe one fine a year. Is that what we're looking at?
I don't think that is the case, because if you notice, it says up to. So within the 30, up to 30,000, you're going to start off at a very low base to get to that. So I could give you the composition of that, but I don't have it with me at tonight. So if Philip, you'd like to have that as an action for me, I'm more than happy to supply the committee with the information.
Thank you. Just on a similar theme, and because we've got Rob here, I was wondering if there was any plans to try and do more planning enforcement, and whether that was a viable way of making savings.
One of the options being looked at actually in terms of savings potentially is looking at planning enforcement. But we'd look at across all the possible options in the service, but also looking at being more commercial. So actually you can make those savings by making more income. So there's things we can do for where there's situations like that to charge for planning advice, to sort of guide people through the planning enforcement process and guide them to submit a planning application and get the fee for it. So actually there's ways of hopefully being able to do this without reducing the level of service, but charging more for it. So yes, all those types of options are on the table through the planning enforcement service. As you know, it often runs in parallel to the housing enforcement side of things as well.
So are we expecting proposals about that in February rather than as being included as part of this budget?
Potentially, yes. Yeah.
Yep.
I wanted to ask a question about the additional modular lodge that is being proposed. And we're saying that we're trying to identify an additional site. Obviously, the site at Olive Morris House had caused some controversy, and perhaps that was because of a lack of kind of long-term engagement with the residents in that area. So I'm wondering whether a site has been identified, if efforts have been taken to kind of like scope out how that might impact the people living there. And I guess kind of more importantly, but like, does this, do you imagine this modular lodge to be a kind of more permanent situation than Olive Morris Court is, or do you see it as another kind of temporary modular site?
Two aspects to whether you're talking about permanent there. It's this would be for TA, so not for permanent accommodation.
I mean, like, would the lodge itself be permanent? Because
No. But I mean, I think we should get Robbie in, but because in these terms of non-permanence, it's a 30-year lifespan, I think, so it's quite a long time. Robbie, do you want to?
Yeah, I mean, we've identified a site which should be announced, you know, I think in the next couple of months. In terms of temporary building is assured, its life is assured for 60 years, and in reality they will stand probably longer than the buildings that we traditionally build. I think the main difference is that what they are is demountable and movable. So for about 10% of the cost of the building, if it allows us to build on a site where we might have other plans, or where something's safeguarded for Crossrail. And so what that allows us to do is it allows us to keep the homes on that site for a period of time, probably a 7-year planning application, but may well stand there a while longer. But it gives us the ability to move it in, say, 7 years, 10 years, 15 years when we need to use the site for something else.
And just on the one and only new revenue growth proposal, that's obviously for both general inflationary growth, but also temporary accommodation. Does the proposal for increased spending on TA, because obviously we've discussed a lot of other measures that we're using to provide temporary accommodation, including repurposing some of our own properties. There's the proposal in the savings. So is this referring to money that we are inevitably going to have to spend on B&Bs and hotels, or what is this money being sort of allocated for? This is page 119.
Back to general fund, yeah. Yeah, sorry. I'm just that's basically just a statement of fact. I think really it's not like we want to. The growth implies there's a want to do that. That is just the fact that the pressure is there. Therefore, we're predicting the pressure to go forward. Have I missed the question? Sorry.
Well, I think I wanted clarity on exactly what that was referring to, because there are lots of other things we're doing in terms of trying to, provide alternative TA ourselves, and I was wondering whether this proposed spend would also encompass those actions, or whether this is just about, the inevitable B&B spend we're having to do, essentially.
I guess you want to know whether we factored in the other measures, mitigations. Yes, we did factor them in. And this is across the entirety year. It looked at different forms of accommodation, the PSLs, the Airbnb, calling it Airbnb now, the B&B. So we looked at it, and we looked at it would have been higher than this. But then when we brought in the mitigations, like void improvements, pipeline from the new builds and everything, then that pressure came down to this, largely driven by the cost out there in the market. It's very, very, very rare to get properties, and when you get them, very expensive. So yes, it did factor them in.
Robbie Urban can comment on this subject as well, just in terms of what this growth includes and what it doesn't.
Yeah, I believe it would be a combination of increased incentives as a result. We offer incentives to secure properties, and we need to offer a bit more. Also, there's been an increase in the sort of IBAA rates, which are the rates at which boroughs have agreed we'll get properties at, so that will also factor into this.
Okay. Any more questions on any of the budget? No. Okay. Any recommendations for anyone?
Sorry, Chair. So we've been through pretty much every bit of the budget and it's been referenced. I just wondered whether you want to take a minute to look at the final appendix, the capital programme. If there's any points you want to draw out or any questions any of the other members have on the capital programme.
Yeah, I actually didn't really have any questions on this, but if anyone else does.
I mean, it was more an observation on the High Road West scheme, but it does feel like, I know this was from 2017, but would you say it's fair to say that the council is taking on a lot of the risk here through the acquired CPOs and Lend-Lease potentially more of the profits, even within the constraints of the viability assessment? Because at the moment it feels like, you know, although it's not risk-free, we have covered our back, but yet we fundamentally are the ones who are doing all these CPOs and taking on like what is some of the highest levels of capital debt of any of our schemes, like across it. And would you say, I guess maybe also a political question, is this something that we would continue to do in the future, or do you think this is something that we see as not viable to do again on a different estate or a different development scheme?
Okay. When you look at the capital programme, what you're seeing is the cheques that are being written, okay? What you don't see is how we fund that. And so in that budget line of 129, we will have payments of the GLA grant that they're going to give us, which is about £70 million, to Lend-Lease. So that's not a debt issue for us, but you're right that we are incurring a lot of expenditure under the CPOIA, but our expenditure level there is capped at £36 million. Okay, but we have to have it in this budget because we've got to make a payment. But if we breach the £36 million limit, we would then get reimbursed immediately by Lend-Lease to bring it down to and below the 36 million. I should have mentioned that earlier. I'm sorry, it sort of slipped my mind. But that's another one of the protections that we have, that we're capping our exposure.
Okay. Yeah, I suppose my only question on the capital is also the money that's been put aside for wood green regeneration. This is to essentially carry out improvements that have been identified as part of Wood Green Voices. Is that correct?
The budget there is again, you're seeing the expenditure side of the equation. Some of that budget is funded through match funding and external funding to do with it, to do with the individual projects. This budget will be for a number of interventions around the Wood Green area, and one of the first things it's going to pay for is the master planning that will be going forward on Station Road and the library site to see what exactly we can do, and then thereafter, as that programme develops, we'll be looking to utilise the money to, say, probably do public realm works and various other ones. At this stage, it's all very.
And also there are projects like the workspace project in the Cumberland Road building to create an affordable workspace scheme. So there's a range, and some of it's public realm, some of it is sort of interventions to sort of stimulate economic activity in the town centre. Good growth funding for some of the works to things like shop fronts.
Yeah, and part of my question was, is this kind of explicitly linked to that piece of sort of placemaking co-production work? So is it sort of the case where when we do a piece of work like that, we do ensure that there is capital budget allocated so that we can actually carry through with what people are sort of expressing a desire to do?
Well, it's definitely the case that that kind of engagement exercise is informing all of the priorities for our work in Wood Green, and that would also include things like future funding bids, because obviously we hope that bodies like the GLA will continue to bring forward funding rounds, and obviously any projects we put in will be things that have come through that exercise.
I suppose obligatory comment that the civic centre seems expensive, but I mean, I presume the answer is interest rates, borrowing costs, etc.
I did this the other night, so if you're to carry on. Yes, it is expensive, but what again you don't see here is the option of not doing it and to meet the things that we need to do. And I think it needs to be borne in mind with regards to the civic centre that at least half of what's going on is to the restoration of a listed building, which we sort of would have to have done at some point, if not necessarily now. At some point, we would have to do that investment into that listed building. So yeah, so I understand that it is a lot of money, but as I say, the option of not doing it and meeting what we need to do, our accommodation requirements, I think is more expensive.
Yeah, and just to add to that, I don't think it's a realistic option to leave the civic centre in the state it was in. Ultimately you would be at risk of seeing your civic centre added to the historic building, at risk register, which is not what we'd want to do. So we have to invest in it. I think it's good value when you compare it to some of our surrounding boroughs like Hackney Town Hall, Camden Town Hall, or Waltham Forest Town Hall.
Yeah, we don't have our opposition panel member with us today, so I just thought it was an obligation to ask about the civic centre. Okay, any other comments or questions, recommendations? I did find this, I guess, partly due to the nature of these proposals, it is all quite limited. I didn't really see much scope for recommendations, to be honest. So I'm happy to bring this item to a close. Thank you very much, everybody.
So really good. So obviously Councillor Bevan was talking earlier about the fund that was incorrectly stated as 20 million, and it seemed like you were there was something there that you were looking about in terms of assurances about whether the government should be paying for that through local housing allowance or something. I don't know. Is that something that you wanted to put forward as a recommendation?
Well, I think it's just to say it's not a mistake in the wording. It's just slightly ambiguously worded, but I think it is clear that it's not referring to a £20 million fund there. But I think your point, John, was around where benefits should be paying for something, that we expect that is what is used in the first instance to maximise the tenant's income and make sure that any increases can be paid for before we then refer them to a fund. Is that right? Yeah. And I assume that's what the council would be doing anyway.
That is what we do already, when we had the fund that we had previously, we, as Robbie I think outlined in his answer, we target it at a very small number of households who are benefit capped, and then we target it at those who are not on benefits but can demonstrate financial hardship and low incomes.
Yeah. Did you want to put a recommendation forward on that still, John, or are you content with that?
Well, David, did you just say we target it at those that are not on benefit but are suffering financial hardship? Because that's a bit different to saying they should be getting help with some housing allowance. I'm a bit confused now.
Well, what I'm saying is that, and it's back to sort of Robbie's answer earlier on this, that there are a very small number of households who are benefit capped, and we'd look to help those who are on benefits. Obviously, their rent should be paid by benefits, so we wouldn't be looking to apply it to those households. So it would then be the remaining households who do pay their rent but may have fallen into financial hardship. Does that answer your question? So it's basically those that have fallen into rent arrears and are getting help from our financial inclusion team.
I mean, the only people in theory we should be helping are the people who are subject to the cap, because everyone else can get help from the government.
Yes, so the fund we were talking about isn't for that, because that's already happening. This is an additional to give some help to tenants who are suffering due to the cost of living crisis. They're suffering financial hardship and falling into arrears. So to help them manage their arrears, pay towards some of the arrears and get them on a plan to have a stable footing going forward. It's a slightly separate, because there's already lots and lots of financial inclusion work going on. This is just a sort of a bit of additional support because of the cost of living crisis. Yeah.
And that fund, a lot of it is to do with the increase in energy, right? And that's not something which is covered by, that's not covered by one's benefits, is it? Energy bills?
No. So that was the thinking. But I think when officers have done lots of work on how best to target people, and with the information available is those that are falling into arrears, to help them not get increasing arrears and then be in a position where they can't stabilise their finances. So to try and target it as accurately as possible to help to have the most effect.
Yeah, sure. So in addition to, the other part I was going to, there was a couple of requests for further information. One was around the three revenue savings, which were characterised as repeat. So it was just a bit more information on that. And there was some of the financial assumptions made behind the saving in relation to CPNs. Is that right? So,
Yeah.
I've captured everything we haven't missed. Yep.
Is that everything? I think so. Yeah. Thank you. Yeah. Thanks everybody for that. Officers are free to leave. Thank you very much and Merry Christmas. And our next item for the rest of the panel is just our work programme update. So Philip, did you have something to say on that?
Yes, so at the back of your agenda pack is a draft work programme in all its glory. So there was one meeting left on the 26th of February. There are a number of items put forward there that already looks quite busy. I guess it was just to highlight the work programme to members and to ask you to note it. And if you have any comments around future agenda items, please email them to me.
I've got a comment on the work programme when the officers have left.
Okay, yeah.
What's the process for the what are the next steps with the private sector review? When is that likely to go to cabinet for the recommendations?
So that was agreed by the main committee in whatever it was in November. So then it's due to go to cabinet next year. I think it's going to be put forward in the March cabinet. So obviously cabinet, I believe those 11 recommendations. Obviously cabinet respond to those recommendations saying agreed, not agreed, partially agreed, and then give a bit of explanation as to why it is or it isn't agreed. And once cabinet has agreed those, they will come back here in say 9 months, and we'll have a follow up to see, I guess, how much progress has been made.
Yeah, I don't know whether I should have suggested it while the officers were here. I know this is a really minor problem, but all these new builds, all the landscaping around them is really lovely. And after a certain period, that maintenance becomes the responsibility of the Parks Department. the Parks Department does not have the capacity to do it. They're only paid for 2 visits a year to all of our housing, green bits and shrubs and all that type of thing. So all that nice landscaping that we're doing is going to descend basically into what we see around our existing estates. So I'm just wondering, is it a little work project to deal with that issue? And say, if the Park Service can't do it because they haven't got enough staff, and I'm going to be unpopular here, we're going to have to get a private contractor to maintain it properly. It's just because it's such a shame that we're going to have lovely landscape stuff all around our new housing, and it's just going to end up like a jungle like it does all the time. So I'm just putting that forward as a
I mean, it sounds like you're asking for additional investment into maintenance of green spaces around housing estates, which seems very much a budgetary issue. Yeah, so I mean, I don't know if you want to put something forward on the budget around the possibility of some form of money put aside to support this.
I mean, we're going a bit. I know that if we found that extra money, if they went 4 times a year and maintained them all nicely, the Park Service can't do it. They've got no staff. They just can't recruit staff anywhere. I don't quite know why. And when you look at that big development on the behind Wood Green High Road, along the chocolate factory, all that stuff that's going on down there, all their landscaping is perfect, and it's going to be. You can bet it's going to be kept like that because it's not the council. And as the Park Service can't recruit any staff, if we do this, the only way I can see it happening is if we get, say, a landscape contractor who's looking after theirs to come and do some of ours, which might not go down well, but it's, it's just thought.
Is there any reason why an additional staff member or team couldn't be funded through the HRA, given that that's self-financing and that's not in too bad of a state, as opposed from those staff coming from the parks team? Is there any reason?
I am out of my depth on this one. I'm not sure. I'd have to ask a finance officer.
It would go on the service charge. It would be an extra cost. If it's going to be looked after 4 times rather than 2, then the cost of that on the service charge would be extra than what's being paid now.
So it could be service charge.
I'm
wondering whether we can have a bit more of a deep dive into the local plan at some point. I think it's really, really important. And I know that it's coming out for consultation quite soon. So I think it would be very good for us to spend a good amount of time. And I know that you had also spoken, Alex, about the allocations policy, because I know that hasn't been reviewed in some time. And that's something that comes up very frequently in casework, is people not happy with their allocation currently. So if there were 2 areas that we could focus on, I'm sure that landscaping would be important, but perhaps we could also look at the local plan and the allocations policy.
Yeah, the local plan has kind of been on our agenda setting meetings when I've met with officers in between these meetings, and it's been on the agenda every single time. And the reason we haven't looked at it yet is because of delays with the local plan itself, and there hasn't really been much point in looking at anything until we have a document that can be made public to scrutinize. So I'll definitely speak to officers about that coming to the next meeting, whether it's in a position to do so. And on the allocations policy, the plan is still very much to go ahead with a scrutiny review on that, which I think many panel members were interested in when we last discussed it. Yeah, we did have one sort of initial meeting to start trying to move things along with that, but I don't know if Philip, you can say any more. It's essentially, I think we're just going to try and get going with it when we're back in the new year.
Yeah, that sounds very. Obviously, once we get the budget out the way, we'll try and take that forward and have some evidence sessions and get together with officers. In terms of the local plan, it is on the forward plan for February. I believe obviously it's out to draft consultation, or will be, and the report that comes in February will be a discussion piece or around the sort of consultation responses and where the plan is to date.
I just had a quick question. I don't know if you know this, Philip. Given that there's going to essentially be like another version of budget proposals, and they're probably going to be quite different, maybe not necessarily in our department, but in a lot of them, are they going to be coming back before the scrutiny panels? Is there going to be an extra meeting crammed in, or how's that going to work?
So my understanding is, obviously what you have in front of you is a draft budget position that was agreed by Cabinet. That draft budget basically says that there is a £16.4 million gap. Obviously work is ongoing to close that gap. Part of that process involves government settlements and grants that come in December and January, so they'll have a better picture of what the final figure is. There will need to be work done to see how they will close that gap. And the proposal is that there will be an additional overview and scrutiny committee before February Cabinet to consider those proposals. But obviously, that's dependent on what those if by some miracle the budget gap evaporates, we aren't going to need that meeting. That seems unlikely. So yeah, there is going to be an additional overview and scrutiny committee to consider those new measures that are put in place between now and then.
That will be OSC, but probably not an additional meeting of this panel. Did you have the question? Like, oh, sorry. Any other AOB? No. Okay. Well, the next future meeting, the date that's listed, it's probably going to change. So we will update you on that as soon as possible. And with that, I'll close the meeting. Thank you very much.